guys, this is Imran from Options Insight. Due to the incredible interest that I've had from people asking me about crypto options, once I've told them I've become active in the space, I thought it made sense to start making videos about crypto and crypto options specifically. Now, I'm not a blockchain or crypto expert, but what I am is an options expert. And since June, I've been trading Bitcoin and Ethereum options with my own cash, and I've managed to 5x it. I've also managed to do that in a way where my risk was super controlled and I wasn't going to lose a hell of a load of money. So the idea of these videos in this new series, which I'm going to call Crypto Insight, is to talk you guys through some of the strategies and ways that I'm trading crypto options and taking advantage of my knowledge of trading volatility, term structure, skew, and being able to manipulate those positions to give myself some edge and give myself some advantage in the way that I express my views to participate in these crazy wild swings that crypto markets can have. Being a vol trader, I'll tell you now, the most exciting and the most fun assets to trade, volatility, are the ones that know how to move. And right now, there's no other asset class that knows how to move like crypto. So with that, I hope you enjoy this video. Please subscribe to the channel if you like this content, and feel free to sign up for a free trial to Macro Insight, where you'll get this type of content. You'll also get other asset classes, and you'll get live Q&A with me. All right, so what's been going on in crypto land? Yeah, so this is Crypto Insight, and we're going to talk on all things crypto. Well, when I say all things crypto, all things large cap crypto. So that's Bitcoin and Ethereum. Yeah, those are the things that have liquid options markets. So those are the ones that I'm going to focus on. So we look at the Bitcoin chart. We kind of had been tracking this correction that looked like it had kind of done enough last week. This ABC type pattern here into major support levels around, 29.5, 2800 sort of area. That did stage a bounce. Now we had a crazy bounce all the way up to 38 and a bit. And that was because Elon Musk put Bitcoin on his Twitter handle, on his Twitter profile, which is ridiculous, but that's what happened, right? Now that got faded pretty quickly, but it managed to hold on to supports at around 32, which is good news for Bitcoin, because that basically then leaves the scenario open. If we go to this chart. So I was basically trying to figure out on that rally that happened on Elon, what sort of levels we were looking for retracements. And it's kind of managed to hang in there. I mean, it did briefly go below, but then it got back above and then held that support line at around 33. And it's suggesting that correction that finished down at 29 was over. You had a first wave impulse up to here. This is some sort of corrective formation, and now we are ready to stage the next advance of the rally, right? But really, the line in the sand that we need to break convincingly and close above is 38,000, right? So if we can close above 38,000 in Bitcoin, that probably opens up 48 to 50,000 over the next month, basically, right? Or even the next couple of weeks, right? So that's kind of where we are on Bitcoin. But I think, look at where this thing kind of held around that 32 area. That's probably not a bad sort of intermediate stop level, right? So if we break back below 32, then maybe the correction's not over. But if we can hold 32, then there's quite a lot of upside, I think, in this thing from here, right? So that's kind of what I'm thinking on Bitcoin. In terms of volatility markets in Bitcoin, they've been absolutely battered, right? So if we bring up the crypto vol, this little website that I like to use on crypto vol, and we look at the money vol over the last sort of month or so. So you can see here that short dated volatility, so let's call it 30-day volatility, is down at about 100, and it got to highs of a few days ago it was at 125. So it's collapsed 25 vol points in a matter of days, right? Which is pretty dramatic, right? So as Bitcoin's been kind of chopping and finding its
its level around 35,000, that vol's just collapsed. But you can see that spike that it had from about 105 up to 125. That came with that Elon Musk rally, basically, right? So you can see where the impetus is to buy vol in Bitcoin. So when you get moves to the upside, that's when the buyers of vol come in, right? So everyone scrambles to buy calls when you get moves to the upside in Bitcoin. In Bitcoin spot, people come and buy calls, and that takes Bitcoin vol up, basically, right? So I think if you are bullish, you've had a nice pullback in vol back down to 100. You've got to rebase your expectations, right? In Bitcoin, 100 vol is cheap, right? Or in any other asset, 100 vol is crazy expensive. In Bitcoin, 100 vol is actually relatively cheap, amazingly enough, but it is, okay? So I think that's not a bad time to be scooping up calls at the moment. If you do believe that rally is kind of in progress. In terms of catalysts, you've got Michael Saylor, the CEO of MicroStrategy, who obviously moved all of his treasury into Bitcoin. He is giving a load of presentations to corporates, I think, on the 4th, to try and convince a lot of other corporates to do similar sort of things to him. Probably not put 100% of their treasury in, but maybe 10% or whatever it is, and explain why he did it, how he executed it, what his thinking is. So he's going to be there banging the drum, trying to convert a load of these corporates to do the same thing. So that's maybe a catalyst, right? What else? The other real major catalyst is in Ethereum, right? So Ethereum's futures are getting listed on the CME next week, right? So you've had this ascending triangle, which I put up on Twitter today. So you got this ascending triangle that's been forming. So whilst Bitcoin has been correcting from it reached 42 and then had a sharp correction, and it's been correcting, this thing, you can see the way this thing's correcting, it keeps making higher and higher lows in this ascending triangle formation, right? And today it kind of threatened to break that. So far it hasn't managed to stay up there. If it manages to break and stay above on like a daily or even a 4-hourly chart or something, then you can maybe think the game's on, right? And it's going to break. If this thing does break, I mean, it's got legs to like 1800 to 2000 probably, right? In terms of technicals. And then because you've got that catalyst for the futures getting listed, maybe the market just gets excited about that. Now, in terms of when Bitcoin futures were listed in 2018, the market rallied sharply into that, basically. And then after that was done, everyone just got out of their positions and it collapsed. So I don't know if we're going to get a repeat of that, but this is the week. If it's going to repeat itself, this is the week for that to happen, right? If history is going to repeat itself, this is the week where you're going to run up into that major announcement and them getting listed on the exchange. I think it's on the 8th of February next week. And yeah, what happens after that probably depends on how much we rally, right? If we don't rally much from here, then I'm not sure we need to collapse. If we break the level now over the next couple of days, we take it out and we go to the moon, then yeah, that's probably a sell the news opportunity, right? Where you should be buying it on that break here with a view of getting out of it before the actual listing on the 8th, maybe, right? So something like that, right? In terms of how to play that, there's the various ways you can play it. If you're going to be brave enough to play it in delta space, you've got to give yourself a wide enough stop, right? Right. When you trade stuff in delta space, you need to put your stops in a place where noise isn't just going to stop you out. Yeah, you want to be proven wrong to be stopped out. And the problem with 100 vol, and Ethereum's actually 150 vol asset, right? Ethereum vol's trading 50 vols over Bitcoin because people know Ethereum is where the event risk lies right now, and it's got a lot of beta potentially to the upside, right? So that's the thing. When you're trading 150 vol, you're basically saying this thing does 10% a day, right? So then where the hell do I put my stop if I'm going to buy it, right? Minimum 10% away. But even then I might just get stopped out on noise, right? So really, if I'm buying delta on this thing, I need to be putting stops 15 to 20% away, which is quite far. Yeah. And then so you've got to size yourself accordingly to know if my stop's there, how much am I willing to lose when I get stopped? And then size myself accordingly, right? But that's generally the correct way of thinking. How much does the asset move? I need to pick a stop that is not going to just stop me out on noise, which means it's at least 1, if not 2 times the average daily move, right? And then I need to be sure that the upside potential is big enough that my risk reward is correct. And then if I get the green light on all those things, then I size my position to not lose more than I'm comfortable losing, basically, right? So that's this kind of 3-step process that I use to think about it when I put on delta positions, right, by themselves. Now, optionality wise, you can definitely trade it, but it's not cheap, right? So Ethereum calls are 150 vol. Call spreads are probably looking a bit better in terms of like efficiency and pricing and how they're going to carry. But if I bring up Deribit, actually not on here. I mean, full disclosure, I've been picking up short dated calls over the last few days, opportunistically on dips to try and get some gearing to this potential explosion if it does break out. So and I've been kind of agnostic to the vol, right? I've said I know the vol's expensive, but I'm going to live with it. The reason why I've done it like that rather than buying call spreads is because I do think it could be a case of we get the break, we smash up a few thousand points, and then we collapse straight back down again, right? And if you buy call spreads and you've got that on and the break happens, you're not going to make anywhere near as much money as if you buy calls. Because the good thing about buying calls is they're on 150 vol right now, but if we break, they're going to go at 200 volt. So not only are you going to make money out of the delta, the gamma of the move, you're also going to make money out of the vega on the move, and you're going to be able to monetize it all, right? Because you just bang them out. So for me, I'm looking at it as leverage play. You know, I'm spending $50 each time on this option, and I think it can go to $200 to $250 if we get the break, and that's like a 5-to-1 payoff on my money. And it's a 5-to-1 payoff that I can actually monetize in the next week if it happens, basically, right? And that's, whereas if I do a call spread, I'm not going to be able to monetize it. It's going to look good. It's going to threaten to make me a bit of money, but I'm going to have to sit tight and wait for my money. And then if it collapses, I won't be able to monetize it. And that's going to annoy me. And that's why I haven't done it, right? Like that. So that's my thinking there, basically. And then the last sort of thing to just kind of keep an eye on is the spread. You know, another reason why we like the bull case for Ethereum is because the spread's holding, right? So the spread's quite volatile, but, you know, there was a big level here at 0.04. It took it out. It corrected, and now it's back above there, basically, right? So it's holding for now, right? So is it that convincing that it's, well, the fact that it got all the way back to 0.36 intraday, it's not ideal. So it's very volatile, but it's moving in the right direction, right? So that spread, you know, you zoom out, it is moving in the right direction. So it does suggest, you know, the next leg in this spread up towards 0.05 equates to like a 20-25% outperformance of Ethereum over Bitcoin. And you can kind of get on board with that idea, right? Where Ethereum has its break, has legs up towards 2000, and then Bitcoin rallies as well, but it gets to like 40,000, right? So if Ethereum's at 20,000 and Bitcoin's at 40,000, then that ratio is 0.05 on this chart, which is quite realistic, right? That, you know, we could get this chart up to 0.05. It really doesn't make too much difference on this chart. It's quite a realistic target to get up there. And that equates to Ethereum at 2,000 and Bitcoin at 40,000, basically, which I think is quite realistic over the coming weeks, right? That's kind of how I'm thinking about it.
Thanks so much for watching, guys. If you enjoyed this video, then we'd love to have you join our Macro Insight community. Just visit www.options-insight.com and sign up for your free trial to our live and interactive weekly macro call. If you haven't already done so, please subscribe to our YouTube channel. You'll find more market updates, class highlights from our summer academy, and also video tutorials on anything from options basics to market making fundamentals. You can also connect with me directly. I'm on LinkedIn, Twitter, Facebook, Instagram. You can follow me on any of those platforms. Or alternatively, feel free to send an email to inquiries@options-insight.com.